Hello, Lonnie Stevenson here with today's update and market information. It's been quite a morning here. The December jobs report came out, and all indications from earlier the week was this number was going to be a pretty solid number like we had seen for the last quarter of 2013, and true to everyone's predictions, the exact opposite happened, and the numbers stunk. It only showed 74,000 job creations for the month of December, where we had been averaging anywhere from $175,000 to $200,000 a month. So this has had a negative effect on the stock market and a positive effect for our interest rates, where we're actually seeing improved pricing this morning versus where we had started the week with. So people that have delayed a little bit of a reprieve here, we're actually seeing some better interest rates today, Friday the 10th, than what we saw at the beginning of the week. So good news there. Some other good news that we got earlier this week was the FHFA, which regulates Fannie Mae and Freddie Mac, had in December let us know that come March 1st of 2014, they were going to increase some of the risk-based pricing grid that we have for loans depending upon loan-to-value, credit scores, and they were going to revise some of those numbers, making the people with lower credit scores and higher loan-to-value scenarios probably price a little bit higher, and thus making the interest rates a little bit higher on those loans. They have now backtracked on that policy that they came out in December and decided to delay implementing that in March, as they wanted to do a little bit further study of what impact that may have on our housing market. Duh, you think raising the interest rates is going to have a negative effect, but let's do a study on it and make sure that's what's going to happen. The other thing too is today you're going to hear a little bit of news moving forward on QM, qualified mortgages, and some of the new rules and regulations that are still gifting us from the Dodd-Frank legislation from a few years back. A couple of the highlights are our hard debt-to-income ceiling now is 43% on these mortgages, so where we could maybe push that debt-to-income ratio a little bit higher before, now we're being given 43% debt-to-income ratio, which again is going back to the way loans were wrote years and years ago. We had just been getting away from that, and of course we really got away from it back in 05 and 06, but we all know what happened there. So 43% is our new DTI. The other big thing is when we are qualifying people, if they are looking at an adjustable rate mortgage, we have to qualify them today off of what is the worst possible scenario that those people could have, and what would that interest rate be, and we need to qualify them with that. So even though you may see a nice low teaser interest rate, and I saw some on the internet the other day of 2.75, when you clicked on the details, it was only good for a couple of years, and it increased on yearly increments and blah, 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 blah. Those low teaser interest rates, although certainly the people can get a lower interest rate, but with the underwriting guidelines, we need to qualify them at the maximum rate that that thing can go up to, so it makes it a little bit more difficult. And of course 30-year mortgages is becoming the standard, although now there is some talk again about 40 years being introduced into the market. So we'll see how that plays out. Right now 30 years is pretty much what everybody is trying to stay within. Also want to remind you that we got another class coming up online on Tuesday, and we're going to show you how you can use Facebook to win that next listing appointment. So a great class coming up. If you missed the class this past Tuesday on making phone calls to your database and scripts and different ideas of how you can really make those touches on a regular basis to people in your database, whether it be friends, contacts, previous customers, or maybe even people that you have got cultivating in and are still looking at properties, really great system on how to stay in front of those people and not make it a chore every day and every week. So with that, I hope everybody has a great weekend. If you need anything, as always, please don't hesitate to call, text, or email me if you need scenario help, or if you have somebody that needs to sit down and get pre-qualified before showing them a bunch of properties and running them around to look at homes. Have a great weekend, and we'll see you next week with another update and information. Thanks. Take care. Bye.